Big day in the markets and a big day for pre-market prep as we've secured our first of many sponsors. We'll talk about that later on. Different theories about why the market's deep in the red. I have mine. Dennis has his. We'll let you guys weigh in too. Not much on earnings. Elliott taking a big stake in Pepsi. Analysts. You know what the analysts did at the Hamptons this weekend? They worked their tail off. We got a ton of ratings to discuss. A September to remember. We'll talk about it with Tommy Lackey at 8:35, folks. Let's get this show going and this week going right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, this show is not going to be sponsored by Tom Petty as we are free falling now, but here we are, folks. We're down 55 handles looking for a bottom. A lot of overnight action. We'll talk about that. The buck, that's up 68 cents, 98.37. TLT getting whacked down to $1.10. That tried to hold up, but now breaking down. USO up $1.21. Boy, everything's bad. That's bad for inflation. 76.05. Flight to quality GLD up 340, 321.47. SLV, forget about 35. Forget about 36. We're knocking on the door at 37 here. Up 67 cents at 36.86. Bitcoin futures, well, they're holding in there. They're up 16.55 at 110,430. We'll bring on Triple D here as he cancels all of his bids before he comes on the show today. Dennis, ugly out there to getting uglier.
Yeah, falling here. They're talking about nonstop on CNBC here. So Friday night, and again, this is like, we knew this Friday night. S&P futures weren't down that much, so it's hard to attribute this entire fall to the court rules that tariffs are illegal, but that's what CNBC is running with here. There's a lot of other reasons for this fall here today as well. But it was announced Friday night that the courts have ruled tariffs are illegal, and there is a potential that the U.S. government would have to pay the tariffs back. Now, while it is an appeals, they're allowed to continue the tariffs, and it's all likelihood Trump is going to appeal this to the Supreme Court, where when we look at the Supreme Court, Joel, it is 6-3 conservatives on the Supreme Court.
Correct.
Yeah. So in all likelihood, President Trump's going to win here in the end. So, I mean, we can run with it, and CNBC's got it on the screen. They've been talking about it. It's flashing up that tariffs are illegal, and this is the reason for the sell-off. But this is not really the reason for the sell-off. There's lots of reasons for this sell-off. One, you've got a global sell-off here. And the reason this really isn't the reason for the sell-off, Joel, is we knew this Friday night. Well, S&P futures were open Sunday. They were open last night. They weren't selling off on it. You're telling me it took them 3 days to figure this out? I think it's just more of a matter that we've been on a hell of a run. Money managers are coming back to their desk. They're seeing a little bit of weakness, which we've had in tech. We've been talking about the leaders for a while here. Palantir. We've been talking about, like the weakness in the AI trade, NVIDIA, kind of leaking away its gains. I mean, you're just seeing a lot of tech stocks, which have been your leaders. Those charts look like they want to cool off. We've been talking about this Palantir. I said on the show last week, I think Palantir's high for the year is in. It's setting up an ugly head and shoulders here. Left shoulder, Joel, end of July, 160, head up to 187, 190. Right shoulder forming nicely here with resistance at 160. Now we're resolving to the downside here again. I mean, the thing's trading 150 times sales. Stupid. It's stupid. Stupid value. Now, again, when story's hot, who cares? Trade anything. But would I invest in Palantir at these prices? Never.
Oh boy, I wish I would have put a date when you called out that 160 level. I had to move it, but I'm going to put this head and shoulders top call right here, 9-2. That you've been saying that for a while.
I've been saying it all week.
The triple D level was 160. We popped above that, but Dennis, I almost was going to get you. I almost and you use data. And so I can't prove you as wrong as I thought I was going to prove you wrong. But the reason the tariffs are not the reason for this decline is because the SPOOs were up Sunday night.
I know. That's what I just said.
Yeah.
I said the same thing. Yeah.
Yes. Yes.
Like we knew this Friday night. Spoos
Yes.
didn't sell off Friday night. We knew
No.
this Sunday night. Spoos
No.
didn't sell off Sunday night. We knew this last night. Spoos were not
Exactly.
selling off last night. They were flat until like 9:30,
Yes.
10 o'clock at night. So I
And
mean,
you know
it's
what happened?
absurd to say the market is selling off because of this tariff information here. And we look, take it a little bit further. He's 6-3 conservatives in Supreme Court. He's gonna win.
It's concluded.
He's gonna win.
Like it's a timestamp. It's just.
Yeah.
But what I think has changed and what has been going on over the weekend is I'm very worried about the global macro situation. I mean, if you've been paying attention to what's going on, Putin, Xi, and Modi, they're kissing. They're literally hugging and kissing and holding hands. And Russia is going to build a 1,000-mile pipeline to support them. I mean, how could that, tell me how that could be good for the United States? How in any way can that be good for the United States to have three of our major rivals getting together and holding hands when we're picking on what was supposed to be our best friend, Canada?
Well, East versus West. I mean, that's really what it's been setting up for a long time, and that continues as well. So legitimate worries here, Joel. Like I agree with you. Like this, nothing is good. Now, does that mean we got to come in and sell all our stocks and it's over? No, I don't think so. I think we're just tired and we need a pause. Like it's, we've come so far. We've been talking about this. It's why I said, when we entered the second half, I said the second half of the year is, I think we said July. I said we just come so far. I think it's, it's not going to be as easy as it was from April, May, and June. When we sold off and oversold, it was like COVID. We really corrected too much for the tariffs when we thought it was going to be 50, 80, 100%, and it's landing around 10, 15% for most of these countries. So, the markets can handle that. So we've come back. We've just come so far. And valuations are so stretched. And we're actually seeing, some slowdowns, signs of slowdown. Caterpillar news off their tariffs, not that great last week. We've seen, signs that the consumer is a little bit, getting tight. So, I mean, there are signs here that why, the irrational exuberance, and we're trading right now like it's 1999. Like we're trading at valuations on some stocks that is absolutely absurd. I just talked about that with Palantir. You can't be trading on valuation on Palantir. Now, Story, it doesn't, stories can carry stocks a long ways, and we know that, and it has. But when the story starts to cool off, that's when valuation starts to matter. And unfortunately for Palantir, it doesn't have any valuation support. So if you lose those momentum traders, that's where you get the quick fall off and the cascade lower.
I hope I'm wrong. I really hope I'm wrong, but I think the high for the year is in.
That's hard to say. I
say.
think you could be right. I mean, that's a bold call because we're basically at the highs. We're literally 1.5% from the highs. So we made a new high on Thursday. So, I mean, that would be a very bold call, and I like bold calls.
I said I hope I'm wrong. No,
but it'd be nice to make that call. So, I mean, I think we've put it on the charts. Elconin calls, this is the high for the year. It's a huge call if it's true. I don't think I'm not like panicking. I'm not coming here and selling all my stocks, but I haven't fully invested either. So, I've missed some of this run here too, although my account's doing well because I have a lot of beta in it, and that's why, it is performed, with the market, my long-term account. That is, I'm not talking my trading account, just talking the long-term investment account. I just think we're at a point here though, where valuations are so stretched in so many stocks, it's hard for me to justify coming in and investing stocks here. Now I trade everything, and let's get into some trades because there are some trades.
Wait, before you
trade
do
this
that,
morning is to the short side.
Before we do that, I got something else that's on my mind that's bothering me.
Talk to me.
The Fed, this whole interest rates things. I am scared to death that the Fed is going to lower rates into this market.
Well, they are.
Well, the reason it scares me is because they're doing it because unemployment is ticking higher. Okay. Why don't people just deal with the fact that the labor market is permanently shifting? Okay. AI is taking away jobs. Okay.
It will, for sure.
It will. So we're still using and agree or disagree with the numbers. We're still using the unemployment data and measures that we have to base these interest rate decisions on. I mean, I think just leave interest rates alone. Okay. Let the market play out. If you think that you're going to, change this, secular change in employment by lowering interest rates a quarter point or a half a point, you are absolutely wrong. You are wrong, and it is going to ignite inflation. Look at gold, look at
I
silver.
think it is.
We're going to a hyperinflation environment. And yeah, you could say that's good for stocks because stocks are going to get inflated too. But we are working ourselves into a situation that's going to be very hard to pull ourselves out of.
I think hyperinflation is on the table for 2026. I do think that. I think you're already having, inflation, and CPI poorly tracks it, but you see it all the time. Shrinkflation is just rampant. Like you go, your cookie bars, there's 6 in the package and there's 5. They don't catch any of that. They say they catch that. Bureau, economists are going to say it's in there. We know we've debunked that. We went in there and they say shrinkflation is 1% every 100 years. 1% every 100 years. That's how they calculate it, folks. It's in there. They said that number. Give me a freaking break. That's how stupid they are. They're either stupid or they just lie to us. So anyways, but that's not all we have is the CPI to go with. That's what the market trades on. I do think CPI is going to go higher. I do think inflation is coming. I think you're going to see it through tariffs because not every company is going to eat it like Caterpillar ate it. You're going to see some significant things. And this is why, and we should talk about it. We can say gold is a defense trade. Gold is also the anti-inflation trade, and gold is flying here this morning here. So it's defensive. This sets up well for gold, silver, and probably Bitcoin. I mean, if you're thinking you're going to get inflation here, Bitcoin does trade with the NASDAQ right now. It's like a NASDAQ stock. But at a certain point in time, Bitcoin might start to decouple again and say, hey, this is not, this is a way to play against inflation. Inflation runs rampant. Well, there's only 21 million of these things out there. So, just maybe it's going to be gold, silver, and Bitcoin. So I'm holding my Bitcoin.
Hodler. All right. As the market continues to disintegrate here, we got to move on to our regularly scheduled programming.
Yeah. And I mean, there is a lot of stocks actually this week. You think you get out of earnings season, you never do. We're going to have Salesforce on Wednesday. We're going to have Broadcom on Thursday, Lululemon, DocuSign, RH, Sienna, AEO is going to report, Asana, Internet of Things, which is some Sarah. I mean, and then Zscaler tonight. So there's a pile of stocks reporting. There was a couple stocks that did report here already this morning. They are all trading higher here. Actually, they're not now. NEO was higher significantly last night. Their numbers were pretty darn good. NIO reported earnings of 40 cents, and that beat estimates here. It's pretty big money here, actually, NEO starting to make. Sales were good for this. The car company was trading up last night on Robinhood / IBKR, has given it back. I mean, it's tough tape to report in when you're getting most significant sell-off really in a couple of months here. We're down almost 1% now on the S&P. But NEO's leaking a little bit here. Stock's been doing pretty good.
I'll just say I wouldn't want to be reporting today or this week. I mean, the numbers dictate what actually happens. I'll just say you're 30 cents off that pre-market high at 672. That was made right at 4 o'clock. So not sure where to buy it, but if I owned it, I'd be looking for that pre-market high, which nestles in nicely with the high from last week at 683.
And then we had 2 other stocks. We'll just fly through these earnings report here. Signet also reported earnings here this morning. Their earnings giving them to you tops. Well, just go grab the actual numbers here.
96.
I was reading the highlights here. Signet reports $1.61 versus $1.23, 1.53 billion versus 1.50 billion. They raised their guidance, so people buying jewelry here. I call it the Taylor Swift effect here, which wouldn't be in those numbers yet. 770 to 938 to 804 to 957. So they bump it up. Analyst estimates were lower than that. They raised 2026 guidance here as well. So Signet actually looking pretty good here. SIG stock does have 1.41% dividend. Has been running for quite a while here. Not nearly back to where it was, but come back a long ways from the lows here, Joel. Technical thoughts on SIG.
The only thing I can think about is how far it's from the pre-market high.
It's come selling off here now.
Yeah, that thing got to 96.06.
Yeah, hard day to chase.
Yeah, I'm not sure what they expect to move it in this, but 96. That was a gift. That was an absolute gift. Instead, now I mean maybe we'll get back up to 96 and in a falling market. That's not where my thoughts would be. My thoughts would be is can I even get a look at last week's high? Can I even get a look at 93.50, 93.04? We're even under Friday's high. So if you take this as a great report, you think you're just going to buy this up, then just look at your daily highs. One at 91.05 and two, let's just call it a 3-star at 93.25.
Yeah. So bottom line here is it's tough to chase on a day like this. You can have the most awesome earnings report, which this is a pretty good report, but this is a really tough tape to report into. ASO doing the opposite. So it is the one earning stock that is down. Academy Sports. Buck 94 versus 216, so they missed 1.59 billion versus 1.61 billion. Missing the top, missing the bottom. They did raise guidance, which should help, but doesn't matter. Tough day. ASO trading down here in the pre-market, about 5%.
All I'd say is if I had looked at the Dick's chart going into the report, I don't know if I would have been long Academy Sports here. Dick got a haircut on 2 days in a row, and ASO in the red here. Let's see. What do you look for when a stock, makes a relative, not all-time high, but a high for the year and comes back? Will it be defended at 51.25? Pre-market low is pretty way below that at 48.70. There's some numbers for you, but Dennis, 816. I teased it a little bit in the opening here, but I think it's a good time for you to announce our first of many sponsorships.
Before the
here.
Pepsi, we got to do the Pepsi.
You want to do Pepsi? Okay.
Yeah, because this is the big news of the day, and I had a reporter just reaching out to me as well, wanting commentary on this. I mean, Pepsi's up 5% here this morning. This is a huge move for Pepsi. This isn't some tech stock. This is PepsiCo. $4 billion stake, Elliott's built, Wall Street Journal says. So Elliott coming in, we know Elliott, activist, comes in, shakes things up. Obviously, maybe Pepsi needs some shaking up. It's got a 3.65% dividend here, but, I think you have a lot easier time shaking up stocks that have stories and stuff. This is a consumer staple. Maybe it splits it up. Maybe they do something else, but Kraft Heinz is splitting up, you're announcing here today, and the stock's not even up at all. So I don't know. When I see Pepsi popping 5% on this headline, I think, wow. I'm like, okay, Elliott in there. They shake things up. Sometimes a good thing, but this is a big move. Also the perfect day for them to announce this, though, because it's defensive day. Like where you're seeing the market sell off and all consumer staples are trading higher because they move opposite a lot of times. So not a bad day for this to, be reported by the Wall Street Journal. But is Pepsi worth 5% more today because Elliott took a stake in it? I think it's a little bit overdone.
A little bit? Okay. Boom. Let's see here. 157.52 is the pre-market high. Man, historically, you go back on days like this when Elliott and other people take stakes like this. I mean, maybe it holds up for a day or two, but this is a really important day to note the price action, see how it reacts. It's a good day. It's going for value today. I think this move is completely overdone. If they're talking about breaking up the company, I don't even know if that makes any sense. But if you longer term, you take Pepsi, go back to its all-time high, then you just sit tight. If you're a shorter term trader, just happen to take home the 150 calls overnight for some reason, I think it's a rate to register opportunity. But the most important thing is to make sure you take out that pre-market high, 157.56. That's $2 away.
Okay, we did the Pepsi. Let's bring Brentster in here because it's a big announcement for us. Brentster.
Good morning.
How was your long weekend?
It was very nice. How about you, Triple D?
Did some boating. Went out to the Western Islands on Georgian Bay, which was fabulous. Nice. Beautiful out there. I'd never been out there before. It's like kind of out in the middle there. So we went out with a couple other boats because it's always scary when you're going out there by yourself. You don't want boat trouble when you're in the middle of Georgian Bay, but beautiful out there. Beautiful day. Great way to really end the summer here. My kids are taking a picture outside right now because they're the first day of school too in Canada here. So always interesting when they're going back to school. So it's been good. But and Joe, we never asked how your weekend was. Joel,
It was excellent. It was nice. It was a little bit chilly, but still got Lisa to go swimming outside when it was 54 degrees. Needless to say that we had the entire pool to ourselves, and just a nice relaxing weekend coming. And I'm fired up too because markets are so boring, making new all-time highs every day. Boom, boom, boom. Now we got something to talk about because no one could talk about a volatile market like we can. So I'm fired up on this Monday.
I like volatility. And my August was slow, and we knew it was slow. August is typically my worst month of the year just because it's slow and it's a slow, steady grind, not a lot of volatility. I love the volatility back in the market. Make volatility great again. That's what we want. So, okay, the big unveil. So we obviously, November, Benzinga stopped sponsoring the show. They have been the sponsor of the show for 10 years. So we've been fighting to keep this show going for a long time here, obviously with no income whatsoever for a longest time. Now Stock Trader Network's helping with that to a certain extent. But we did sign our first big sponsor, and actually their contract officially started today. So we are going to unveil the first big sponsor. For the longest time we've been talking, with different sponsors. Well, this was a really good friend of our show for a long time, who's helping us out, obviously, here. And it's also something that we've had requested from listeners here for more crypto content. We cover crypto to a certain extent, but what we are going to be adding is a 15-minute segment once a week where we devote to Bitcoin, to Ethereum, to crypto, just to cover, more crypto content there. So our first sponsor actually is somebody who knows a lot about crypto, and they will be helping, coming on about this. And somebody guessed it in the chat already, actually, here. So we could throw it up there. It is actually Hive Blockchain. Frank Holmes, a good friend of the show here. So you can throw it up there now. Global leaders in sustainable Bitcoin mining. And, Frank has built a hell of a business here with Hive Blockchain off the backs of like Bitcoin here and learning, and talking about it. He's come on and given those analogies. And he's going to be helping to talk about, crypto itself, where we think it's going, where he thinks it's going. They do a lot of other things over at Hive as well. So we want to thank Frank Holmes. We want to thank Hive Blockchain for obviously believing in us and, for coming to support the show. So if you want to learn more about Hive Blockchain, sustainable energy mining that they do over there, you have a little bar there on the corner. You can go hit it with your phone. You can check them out, check out our sponsor. But we do want to thank Frank. Frank will be on Thursday to talk Bitcoin. So, give his projections, see what he thinks about crypto, where we're going here. So adding a little bit more crypto content because we had requests for that.
And also Frank has been a guest on our show for years and years and years. And, we have people make some fantastic calls on this show.
Yeah.
Some of our guests, but when we were all cringing, right, during COVID and airlines, he's the founder of the Jets ETF, JETS, Jets. Talk to us also about digital nomads. People that are traveling and working all over the world. He discussed that. He has been a gold bull forever. And he also has an interesting new ETF. And in light of the negative news over the weekend, it's a war ETF. So I don't know. He's kind of got the whole gambit covered here. Frank is just such a fun guy to have on. And the other thing that I like about the sponsorship is that we're going to have some of the other excellent people from Hive coming on to the show to, give their viewpoint on the company. Hive's a fascinating story. And, as we said, crypto, sometimes you got to, reverse your position. So we're going to be covering that.
Well, I've been holding Bitcoin for a while. I've said, I think it sets up into 2026 where it could be more of the year of Bitcoin again, because if we're setting up for a hyperinflationary environment, again, it is, and I've given some arguments on the other side of this too. I have went full 180 because originally I said Bitcoin was a fad and wasn't going to last if you go back to 10 years ago. And now I've been holding it for 3 years because you know what? It's not going away. And the younger generation believes in this. So now we're not turning into, some people are saying, oh, they're going to turn into a crypto show. We're not turning into that. We're going to be talking crypto. We're talking about 15 minutes a week doing a crypto segment. And I think it's important to cover it because you know what? It's one of those assets that, is not going away. And a lot of people really like trading this stuff. And I mean, you don't have to invest in it, but you can trade anything.
I'd be aware of it.
Lots of things to trade as well here in the crypto. And we've been trading the crypto stocks, the coin, Mara, and obviously there's other Bitcoin miners as well here. But, Hive is doing a good job there, and Frank's doing a good job. The Jets ETF's an awesome one to trade. It's really liquid. Lots of ways to trade. We were talking about that Friday night when we had all that, interest in the airlines on Friday night, which seems to be long gone now. But yeah, so thanks again to the sponsor, Hive Blockchain. And so we're going to continue with the regular scheduled programming here now.
Let's go to the airlines. The airlines news dump for Friday.
Yeah, so Brent, you might as well stick
Yeah.
with me here because
Sure.
this was crazy moves. So I wanted you to go back, show the charts from American Airlines, show the charts from LUV here, Joel. We'll just bring them up here right now because these moves on Friday night were crazy. So what we had was the Spirit official bankruptcy announcement on Friday night. And we're talking about, what's the symbol on the old? They've changed it so many times.
It's
FLYY.
Yeah.
So FLYY. Officially bankrupt Friday night.
Again.
And that stock was getting killed down to 60 cents, not even trading here this morning. So they're gone. So what the algos must have thought is that, oh my gosh, there's going to be so much more business for LUV and American Airlines and all these. And show this, Joel, like show the AAL chart from Friday night. Because this move was absolutely crazy. American Airlines went, and I was jaw dropped by this move, from 1337 up to 1420 on this news Friday night. And we were shorting in the STN room, and I was getting hit because I started shorting too early. Lucky I held some into today because it's given it all back and more. But I was like, I don't think this move makes sense, but holy cow, there was just nonstop buyers. LUV, same story, moving up Friday night. This was the story from Friday night. Like, this was the only thing that was moving, really. These airlines were up 2%, 3%, 4%. And I'm like, really? On the Spirit bankruptcy? Because one, it wasn't a Chapter 7. It was a Chapter 11. So they're still going to operate here. They're just reorganized. So, I mean, I just couldn't see it. But anyways, LUV flew, AAL, Delta, UAL. They were all trading significantly higher. They've all given it all back. It's all been forgotten. So if you're shorting those, congratulations. I covered the rest of my American Airlines just a few minutes ago, actually. So I'm all out of that now. But, man, there was some opportunity there from Friday night.
And then the one that was really sticky on this was ULCC Frontier. Do you remember Frontier, Dennis? We kind of were kicking around.
And it's still holding. It's the one that's holding up the most. So
it's the clear beneficiary from a Spirit bankruptcy. So
ULCC.
ULCC, yep. And not so coincidentally, ULCC also got an upgrade here this morning from Morgan Stanley, was it maybe? I think.
It was Morgan.
Yeah. Or Deutsche Bank. Sorry, Deutsche Bank.
Deutsche Bank.
Yep.
Yeah, so it's a big move up for that. That's the only one that's holding on. They bought them all, but the only one that's really holding on is ULCC, which is up 15% here too. But this is not the day to chase, folks. I'm not chasing ULCC either. When you got a stock market that's been going relentlessly higher and all of a sudden has a 1% sell-off, there's some nervous Nellies out there, and they'll be looking to profit on pops. So I think we're still at this point here where it's probably not the thing to do. And, even the Jets ETF, which we can talk here too, JETS was trading up, and it was up substantially Friday night too, and it's given it back as well. You can see the move up, Joel. We were up about 30 cents, 35 cents, because it's got a big position on all the airlines. It's very liquid. It's a nice ETF to trade, actually. And then, it's given it back here as well. So it was a good pop Friday night. Clearly forgotten here with the sell-off this morning.
I'm looking at all these different setups. I'm looking at the pops. I'm looking at the drops, and obviously ULCC, has probably the biggest beneficiary of the routes. To me, this is a really simple setup, short-term and long-term. This could be a major breakout over $5 here. You had been struggling to get over 5 ever since April. Showing up in the last 2 months highs right at $5. So instead of trying to short this today and say, I'm going to bring it up in the lower 5s. If you really think that this is a long-term benefit for ULCC, then just be patient. It will come back down to 505, 510, 515, maybe, who knows, what the market conditions could be. Speaking technically, fundamentally, if you're worried about inflation, you're worried about the consumer, you're worried about people traveling, you're worried about higher oil, you worry about U.S. travel to, they're local. So that might be a little bit of a benefit too. But the fundamentals right now are murky, but technically speaking, I like this breakout over $5 in ULCC.
So Tommy's in the background. If you're ready, Tommy, give us a thumbs up because we love Tommy Lackey here, and we can bring him on a few minutes early if he is ready to go. I want to get his thoughts on this September sell-off here. If it's something to be nervous about, if it's something to like maybe be buying the dip on here. I don't know how I'm approaching it here. I want to hear what Tommy has to say.
Tommy Lackey Jr., you all know him from Relativity Capital Advisor, joining us here on Pre-Market Prep. Also been helping us out at the STN room. And Tommy, I want to go back to last Tuesday when you were on. You were calm, cool, collected, looking at the relative strength, watching the market go up, saying, I'm really not seeing too much to worry about. We're looking okay. My indicators are okay. I know one day and one night's worth of action does not change your theories and everything, but we got a significant sell-off going on here, Tommy. So just give us whatever the catalysts are. Dennis and I were arguing, well, we always argue, what the reason was. But, give us your overall feel for the market here on what's going to be a rough Monday.
Sell everything.
I love this guy. I love this kid. Dennis, you're fired. You're fired.
Disclaimer, Brent. Disclaimer.
Yeah, let's get that.
No, let's start back over. No, really, I said it again actually Sunday. That basically I go all the way from my monthly, and if you look at my Twitter or X or whatever we call it these days, this weekend I put up what I call the triple play charts because I think there's a lot to be said about repetition and looking at the same charts over and over again and watch how they change, how they evolve. And so I put the NASDAQ, the IWM, and the SPY together every day. I don't post it every day, but I look at them every day, weekly, monthly. And of course, weekends like this where you can go all the way from the monthly all the way down and look at them top down gives you a great approach to what's going on. And I had to go all the way down to a 30-minute chart before I could find any one of those three majors in an RSI bear range, which is basically when it's oscillating between 60 and 20 instead of oscillating between 40 and 80. Our RSI is not an overbought, oversold indicator. If anybody doesn't know that yet, it's actually a trend following indicator if you use it in that kind of manner. And that's why you see on all my charts, you have basically different segments on RSI as opposed to just the norm. But when you look at that, you're in a scenario to where, yes, we're going into the worst month. Yes, we had a great August. Yes, some pullback and pause would all be fine. Why do we have to fight against all of that versus a down day today? Absolutely. I mean, but one of the things that I think is really sticking out to me, I've noticed, and I think we talked about it last week. I think Larry Thompson talk about it this weekend on X, is that, what happens with his breadth as strong as it is right now if the majors go down because the Mag 7 are the ones basically taking a break. It doesn't mean they have to die. They just take a break. And as we talked about, I mean, just taking $30 billion, which would be what, 0.5% out of one of those Mag 7s, and spreading that to the IWM goes a long, long way in pushing some of these other stocks up. And it's never going to show up in the indexes at all.
No.
So at some point we have to decide. I understand all the worries that are out there right now. But some point, we've had years and years and years of every single time we started seeing all the trash rise and all the small stuff rise and all that, it was always basically the end of the rally. It was the end of the era because we were bouncing back and forth. We've had that for 4 or 5 years now. What happens if we actually are broadening out? Money is coming back to play. We could see as indexes go sideways to down all September, and there'd be tremendous opportunities for those who are willing to dig and do the work. and move outside of those few companies. Now, I'm the first one to say I tried this a year ago and I underperformed some because I felt like we'd see some of those broaden out even before now. But we are really seeing it underneath the surface right now. And basically, yes, you can have a big effect when we have such large percentages in a particular sector and or just a few names, and still end up having a market that in overall fashion has the ability to work, not just in individual names, but in well managed or well put together themes and ETF type stuff and things like that. Like y'all talked about with gold, there's some others that are kind of starting to look. I mean, even in with as much as technology is starting to roll, one of the things, or not roll, just pause. Let's not say roll because we're not there yet. But to pause, you see SKYY, which is cloud computing ETF, holding up pretty darn well. And just now looking like on a longer term basis, it could be ready for its breakout. So the question is, where does this rotation go? The only time we really have to worry is when it leaves the markets altogether. And I don't think we're seeing that right now. I think we're seeing more rotation, and just the fact that a little of it's finally rotating out of these monstrous names is giving huge opportunities, I think, in other spaces. But it's still going to look dire, and it's still going to be harder, as you said, both y'all were talking about, as volatility comes back. You're just going to have to position right, price right, and either got to have size smaller or give more leeway. You've got to adjust to that market while we're here for the next few months.
Tommy, do you want to show your screens, or do you want us to run through the charts with you? We can do either here.
I can do it. Well, what I learned last couple of times I'm here is I've learned to increase my page, increase my screen.
Yeah.
And so hopefully you'll be able to see things better.
Okay, awesome. Yeah, we love it when you guests show their screens.
All right. Y'all are welcome to grab that one. I think I just did it.
Are you grabbing it, Triple D, or you want me?
Yeah, I'll put it up.
Okay, so you're going to learn the more I'm here. This is just kind of my normal. It's a 6-chart screen. All 3 top ones are my RSI charts, and I'm going to expand this daily RSI. I just happened to have it on the Frontier group y'all were talking about a minute ago.
Yeah.
I'm going to expand this daily ATI or RSI chart because down here in this middle, you can see that I have 2 sets of red lines and 2 sets of green lines. And you can clearly see if I back on off this chart, when it's staying between those green lines, we tend to be in a pretty darn strong uptrend. And once it can't get above this red line at 60, and once it starts heading down towards this 20 level, we stay in downtrends. So, I mean, yes, overbought, oversold, but using 70 and 30 as overbought and oversold on RSI has chopped up more people than I think has ever helped them. I've made more money with an overbought RSI than I ever have with an oversold one. So it's just a scenario of understanding how this indicator actually works. I learned all this from Andrew Cardwell. He was a good friend before he passed. Rest in peace. He put together great work and all of that. But that's how I use RSI. So it's much more of a trend following thing for me. My bottom charts are, I do some cloud on the left. Middle is just moving averages and a ratio chart to see how we are. These are kind of squished up here for what we're looking at. And then I usually use a little bigger screen. And then also just have, this is stage analysis, which was the website I showed y'all last time. He has a trading view site that can kind of do. And again, David does great work. I'm going to pop over there in a minute and kind of show you a couple, kind of how I look at a couple things here in a minute. But for now, it's just a scenario of you've got to be willing to move outside those names. You got to be willing to look at some things that are starting to work. I mean, a lot of people are talking about energy right now, and I'll have to say I got shaken out of it over the last couple of months and am now looking back at having to re-enter. But you've got to be able to do that if you're going to follow trends when they start to actually work. We all get shaken out. If you think you're not going to, you're in the wrong spot. But EOSE, just one quick name that kind of comes out in some of the research and some of the things I'm looking at right here. This is a small energy stock that really looks strong to me. I mean, it looks like it's got a lot of potential. RSI is in a bull range, I think, across all 3. of my time frames, 65-minute daily and weekly. And then it's basically trying to work outside over this daily area. I might wait till a break here, but at a $7 kind of electrical product stock, I mean, basically it's in that space right now that's getting a lot of attention in the not energy as far as oil, but a lot of utility type, that kind of stuff. Small, good earnings starting to work. It missed this time and went up after missing earnings. That's always a sign you should be looking for. If it misses earnings and goes up, then basically someone wants to buy it. It's that simple. Don't complicate it anymore. But those are the kind of things that I look for in this. And, I do it, David's website, stageanalysis.net, has this awesome screener. He has presets in here, stocks approaching stage 2 level. These are stocks that are less than 0.5 ATR, average true range, from transitioning into a stage 2 stock. Takes his $6,000 universe down to 56 stocks, and something he just added this last week or two, which is just phenomenal, is you can now flip over, instead of looking at the table, you can look at a daily chart on every one of these. I mean, look right here in the middle, CVLT. That's a nice looking setup. That doesn't look to me like it's correcting right now. There's a lot of these charts that are still moving sideways, looking for potential breakouts or reversals, like down here on PBF Energy. And then you can also look in here and see what groups have the most, things like that, and give you an idea of what themes you want to be, what fishing lanes, as I've always called them, you want to be focusing on. Y'all know for decades, my gig has been splitting the markets, trying to break it down, trying to decipher it into smaller and smaller pieces and just find the best areas. I usually did it more in ETF, and I did it with my website for a long time, which I no longer work with, but something like what David's doing here gives you a huge opportunity to find what's going in a market that has very strong breadth, but might be going sideways to down. That doesn't mean people are leaving the market. It just means the things that are driving the indexes are pausing.
Tommy, what was the other, was this is what you wanted to share? Or I thought you said you had another, I believe, from Adam or somebody, or was the stage analysis what you wanted to share?
Well, the stage analysis, what was I saying about, I'm not sure what I was.
Okay.
Sorry,
Okay.
I kind of rambled on.
All right.
No, I'm willing to go through any of it. I mean, basically, I want to go through my charts. I'm not just trying to push that website. What I'm pushing is in a market like this, what I want people to know they need to do is have some kind of they either have to have a few stocks they trade all the time and they're willing to just sit aside when they're not working, or they need to have a way to funnel the market quickly, find the setups they want, and look for the technical setups that they are comfortable with and willing to follow through with. Because again, you can find a great setup that can break out and run, but if you aren't comfortable with how to exit that setup or have a good strategy on how to get out when it doesn't work, it just doesn't work, and you're not going to get anywhere with that kind of an idea. So I think these markets this next month, I fully believe there's a great chance that we have sideways to down pullback. I don't think it's the end of this move based on a lot of the different thrusts and breadth things that have happened, but I think it's certainly something we're ready for and need. It won't be fun. It'll be painful, and there'll be a lot of people that jump out the first floor window, basically just freaking out for no reason, but that's a good thing. That just feeds our next leg whenever that time does come.
Great segue into my next question, Tommy. And, over the years, people have talked about hedging and different hedging strategies and how you can time the market and buying puts and selling calls and all kinds of fancy strategies here. Now with the market down 70 handles, yeah, that was a good idea at the end of last week. But, now maybe it's not such a good idea. Give us your overall thoughts on hedging strategies, puts and calls. You foresee a bumpy market ahead. What's your take on people trying to time the market and hedging strategies?
I think it's a great opportunity, but I think it's a skill. I think it's tough. What happens, and it happens to me a lot, is that the hard part is realizing that you are supposed to get chopped up on your hedges. You're not supposed to make money on your hedges because they are just an offset to your actual portfolio. So if your actual strategy is right, then the hedges will probably end up worthless. Okay. So because your main primary strategy is not those hedges. All right. Unless you are looking at basically looking both ways and literally playing both sides of the market fully, which I will tell you is a really hard game to play. Most people are better off during pullbacks just trying to learn first. Don't worry about hedging. Just try to learn how to tap things back and calm down and not jump at every single opportunity that looks like the market's turning. Make sure that you are trying to find a good strategy on when it can and how it does turn in whatever market you're looking at. But I think that it's one of those areas to where I certainly like when I make money on puts. I certainly like when I make money on start hedging things and stuff like that. But I can't count on it as a money-making strategy. It should be more of an offset. You know, if you're a shorter, you're a shorter, and that's a different mindset. But if you are just trying to hedge your portfolio, you should go into the hedge knowing you're trying to protect yourself, not make profits.
Right. That's
If
a
you're
hedge. That is
making
exactly.
profits off your hedge, then there's something wrong with your other strategy.
You overhedged.
Well, you
Tommy,
overhedged or you were wrong on what your primary strategy is, and that should be telling you something too.
Yeah. Yeah. And I do hedging all the time. And that's exactly what I try to teach is like I'm trying to make money on certain strategies and I put a hedge on so that when the market rolls over, I don't get killed. That's pretty much it. So, you know, the money I'm making on the hedge is making up for, you know, market effects is what I'm really trying to just reduce overall market risk is what is happening here, which actually is working very well today. My hedges on my overnight trades are helping here today, but I'm not looking to make money on my hedging and making money overall, just looking to limit those losses on some of the stuff that I have. Let's talk I just want to get your thoughts here because we are getting a sell-off here today. And at what point, how do you know when the sell-off is, you know, an opportunity to buy the dip or when the sell-off is actually something to be worried about? Like, how do you tell the difference?
Well, I think that's what I mentioned again a minute ago on those time frames. I mean, again, a lot of it has to do with time frame to me. Again, I'm an old school technical person, which, you know, says the highest time frame carries the most weight, but you can't necessarily trade on a monthly chart. And then you work your way down from there. I mean, right now, the biggest sell-off here is in the NASDAQ, if I'm correct. So far this morning, the Qs are moving the fastest. As you can see right here on this daily chart that I pulled up, RSI is still in a strong bull range. I did put out this weekend that right down here in this RSI where it got turned back here at this 60 level. In technical and a lot of momentum-based indicators, people will talk about a failure swing. On RSI, it tends to be if it doesn't get back over 70, which I think is, again, a silly level that I don't understand where it came from. But this 60 level right here, I would say I see much more in my experience and my work. I don't have it back tested, but in my work is that when it fails at this 60 level, you've got a little more to be concerned about in the very short term. Now, again, it can always go down to the 40 level on RSI and hold and move back up, and we're still in an uptrend, and we most likely will from an RSI standpoint. We might have some short-term higher highs, higher lows. We'll see where it goes. But there's a lot of factors in there. You know, my first thing I'll look for is whether it can close under that low from a week and change ago. What's that close right there of? If it can close under 563.28, then that's my first level of concern. From there, and right now we're already under that level. So we'll see whether we close under where we are now or whether we end up working our way back under. But that right there is kind of my first level to turn. If that closes below there, then I start looking at a little more of, okay, will it hold here at the 40 level? It doesn't mean I don't take actions in between here to where I lighten up or stop doing trades in a certain area or tighten up stops in another area. It just means that, again, after such a big, long uptrend like we've had since April, it's something that you got to expect some digestion. We have to have it. I probably said times in 5 tweets this weekend about these particular charts, which I posted all the way from the monthly down to that 65-minute chart showing each one. And in looking at that, it's a scenario to where you're just we're just not in a dire situation. We're just in a scenario to where we've got to be ready for some more volatility, which is good depending on how you trade, or if you have a strategy that can take advantage of it, then go ahead and work with it. If you don't have a strategy that can take advantage of it, take a minute, take a break, back off a little bit, and wait. Now, you asked, how do we know when it actually comes out? Well, again, from a short-term standpoint, a lot of that's going to be chart-based. A lot of that's going to be reversals on a lower level, because we'll start seeing them drop off by level. The 65-minute will turn bear, then a daily will turn bear range, then a weekly will turn bear range, and then that kind of thing, depending on how far it's going to go. When one of them holds that RSI 40 level or higher and turns back up, and the others start making bull ranges again and moving back up on the lower levels, well, that's a first sign on a short-term level that we're probably turning. If you're talking about washouts, that's where breadth, all those things come in. And that's not even in the discussion, because the breadth is just way too strong for that kind of a move here without a lot more setup. I mean, I can always be wrong. It happens a lot, but I don't see us going from here to lows in a straight line without us having some warning signs along the way.
Tommy, you set me up for the last question. You said if we close below, I think you said 563 and change. And I think this is the most difficult thing about the market. Is it one close? Is it two closes? Is it a weekly close? Like, when are you convinced on the daily, like, okay, we got some problems here. We got to start working for weekly and monthly support. How do you categorize that?
Well, number one, if you start and you base most of your trade on the 65-minute chart, you sure as hell should not be moving down to the weekly or monthly and saying, what do I do now?
Okay.
I mean, you've made the wrong decisions. It all should be tied directly to your time frame. And, that's why a lot of times I'll say, instead of saying, daily, weekly, or whatever, I'll say bar. Because again, as a traditional technical analyst, if I'm looking at roughly a daily time frame or so, then I'm looking at, I noted on the first bar and maybe take a little bit off the table, but it's 3 bars. I'm a traditionalist. I'm 3 bars or 3%. Now, if something has a 6% ATR, that 3%, you've got to understand you got to work with changing these numbers. But just from an average stock standpoint, I want to see 3 bars on whatever time period I'm working at close under my level before I'm fully out, or I want to be a roughly 3%, or sometimes I've actually even used I don't use 3 ATR, but sometimes I use a 2.5 ATR instead of that. So, because if you've got a stock that's got twice the ATR as your 3%, you can't really use a 3% level.
All right. Tommy Lackey Jr., a follow on Twitter at GT Lackey. Tommy, great information. Thank you. Give us a good perspective on the markets today. We'll be dialing you up again real soon.
All right. Thanks, everybody. Y'all have a great week.
Thanks, Tommy. It's just a steady sell-off all night long, really. Like, bring up that SPY chart, Joel, here again. Obviously, we'll move Tommy's charts. We'll bring yours back up. But it's just kind of been like steady all night long. Like, we were up actually at one point in time last night, and then we just been leaking. And now, like, it seems like as institutional money managers are getting to their desk in the last hour, the selling is intensifying a little bit. It's like, oh, crap. I was looking, I was on vacation, sitting in, wherever I go on my vacation, I come back, and I'm like, whoa, stocks, what's happening in my Palantir? What's happening to, all these other tech names here? NVIDIA starting to roll over, and I'm like, I don't know. We're lighting up. I think they're all chasing the downside here. I mean, the problem is that this technical damage to the tech stocks was starting. We talked about this rotation for the last 2 weeks on this show. You have seen clear rotation from the leaders to the laggards, where we have seen the value trade pick up.
What happened? We just had another 10-point. Sorry, Dennis. Sorry to interrupt you.
No, it's good.
Something broke at 8:55 there. Another leg lower here.
Yeah, we just keep lagging down here. So just continuing with my train of thought here, which, is somewhat concerning, is that the value trade has come back. And typically the value trade does better in times of turbulence, in times of, like, it outperforms in those periods. And we've been talking about, Palantir not looking healthy anymore. And even AMD does not look healthy here now. I was talking about actually on the weekend, I was like, man, the chart does not look good when you're looking. It looks head and shouldery too. And Nvidia, held up, and now it's starting to leak.
I
here
just
too.
wanted to mention that.
You're getting a lot of breaking of the leaders. And can the market hold up on Berkshire Hathaway and all these defensive names
Nope.
on Pepsi, which is up today? Probably not. So you're going to see the indexes start to go down because they're so heavily tech focused. Now, I know IWM's been doing really great. It's been really running here, with the prospects of lower interest rates coming. But we are losing leadership here. And we've been losing it not just today. We've been losing it for a week and a half to 2 weeks.
You know what it accelerated, Dennis? It accelerated with the Nvidia earnings.
It was way before that, though, Joel. It was way before that. It was look at Microsoft. Microsoft had that great report. It was upside capitulation that day and has been leaking ever since. Meta, has been holding on a lot better. It tried to hold on, but we've been losing leadership here for quite a while now. Apple is defensive. People say, well, but Apple's holding up. But Apple's always traded the consumer staples and trades more defensively. Look at even Apple today. Apple not down even as much as the market here, down less because it's got the consumer staple component. People buy iPhones no matter what. So you can't use Apple as an indicator for what the tech trade is doing. It's all these other names. And I mean, we've been losing that leadership. So it's been concerning for a while. It's been time to ring the register on some of those tech names, probably for the last couple of weeks here. The markets have been rotating here and been ignoring it. I mean, look at Oracle. The Oracle chart, has been going up, but up, 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 up. Friday was terrible day for Oracle. Nobody even talking about it. It was awful day. We'll follow through here today too. And I mean, here's a tech stock that has been, at one point in time was a value tech at like 15 times earnings, has grown just all multiple expansion because they're considering the database company, the AI trade now. And it's went from $130 to $260 in a month or in 3 months, which is absurd for Oracle's size of that company to double in that period of time. I mean, it's a cooling period here now. Like we have just went too far, too fast. And now all these stocks that have been just running, the leaders have become the laggards and the laggards have become the leaders. I mean, XBI today is having a great day. It's lagged like crazy. So lots of things to think about, lots of stocks to talk about here. But I mean, the rating was on the wall, and the rating's been on the wall here for the last 2 weeks that we're losing some of this leadership with these tech Momo names.
Oh man, we're coming up near the end of the show, folks. I'm sorry, we had so much to cover.
Taiwan Semiconductor is getting crushed here right now.
Yeah.
So it's why we just sold off here. U.S. pulling Taiwan Semiconductor's waiver for China shipments of chip supplies. So we are seeing more selling off here. And Taiwan Semiconductor, another chart that looks toppy. I mean, again, we're not huge technical traders always, but the technicals can tell a story here. And they've been telling us that there's been profit taking for a while here now. And they're looking for a catalyst to take the stocks down. Well, they're getting it today. Lots of catalysts here, one with the worries of the tariffs. But, like now this headline, U.S. pulls Taiwan Semiconductor's waiver for China shipments of chip supplies. So, I mean, that's not good for AMD. That's not good for NVIDIA. That's definitely not good for Taiwan Semiconductor here, which is down. It's bounced. It just actually hit 220. So it just bounced $4.
No, it hit
214 on that.
213.01, Dennis.
The stock just fell 10 points in 10 milliseconds. Man, the algos, they are just all over.
Oh, Dennis, it was a minute. It was a minute.
It was a minute.
Yeah.
It was pretty fast. That's your headline here now. Some more bad headlines coming here. Tech is a mess today here. QQQ is now obviously trading down substantially more, 1.59%. And remember, one of the biggest components is Apple, which is holding up well. Microsoft holding up pretty well too. But there's just the Momo trade is coming unwound. Something fierce here this morning.
And also, whether you follow the rumor mill or not, there's, rumors circulating about Trump's health. I guess he's supposed to speak at 2:00 today to put
that's all
that to rest.
That's Twitter garbage. I mean, I just heard people talking, where's Trump been? Is he sick? He's got a meeting today. He's not sick. He talks continuously here. So that's crazy talk.
All right, Brentster, hop in here. We only got through half of our outline here, so we're gonna have to finish. Brent is like content, do this, do that, and here we are. And we get halfway through the thing, and now we got to go do it on STN. But
that's not the worst thing ever.
Okay.
All right, folks, I am honored to be able to deliver the first little Hive sponsorship blip here. This show is brought to you by Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. Scan the QR code on screen in the bottom right corner or visit the link in the description to learn more about Hive. Thanks again to Hive for sponsoring PreMarket Prep.
Continuing over, this conversation is going to continue. We're going
Just
to have
getting
some
started.
ideas. Yeah, it's just getting started here. I mean, make volatility great again. I do want to see markets volatile again. I look forward. Like I've always said, for my own personal trading, I do a lot better when the markets are going down than going up. Like August, I hated. It was a slow, steady grind north, and like just, and my performance wasn't that great. I was up on the month, but it was just slow. I mean, now I'm like, okay, now let's trade. Let's get some excitement here. Let's get some stuff here. If you're getting killed here today and you don't know what to do, come to us a free trial. This is the place where, we make money when the markets are, I make more money when the market's going down. I always have. That's a fact.
Okay, that's it for today, folks. Thanks for joining us on PreMarket